Good morning, traders and investors. Steve Gans here, and welcome to the weekend update for March 23rd, 2025. Before I get launched into the weekend update here, I'd like to ask a quick favor of everyone. If you find that these analyses are helpful, they help you prepare for your week of trading and investing, please give me a like, a thumbs up, and a subscribe. Those are the ways that I know that this is hitting home, that it's information that's helpful to people. So again, please go ahead and do that for me if you would. I'd greatly appreciate it. And then let's get on with the weekend update and analysis. So for this weekend, first of all, we did have a little bit of a sideways chop in our markets here last week. Now, when we came down to this low, I was expecting a potential bounce in that area. And I said last Thursday night that on Friday, more often than not, we tend to get a bounce on a Friday, specifically after you've had a significant down move. Now, that can be just what they call a dead cat bounce. It can also be, in many cases, shorts that start to cover. People that did get short when we broke this 200-day moving average and rode that down, going into the weekend, start thinking, yeah, I don't know if I want to maintain my shorts through the weekend at this point. So we did get a rally back on Friday, and then we rallied a few more times. And those few more times, we just chopped back and forth in this particular zone here that may be a little problematic for us. That's right around that 5,700 mark or so. And so whether or not we breach through that, I don't know. I'm pretty neutral right now on our markets. Now, a couple pluses, though. We can see that in SPX, there was massive volume on Friday, but not necessarily a big market move. Now, one of the reasons for massive volume on Friday, it was quadruple witching. That is where the quarterly options expire, the monthly options expire, weekly options expire, and of course daily options expire. So that creates a pretty significant volume spike in many cases. A lot of times that volume spike is accompanied with a big move in the market. This particular time it didn't happen to be a big market move, but lots of volume. So I kind of discount that volume a little bit on Friday just because of that particular situation. Now let's get into specifically start looking at SPY, and we'll look at volatility as well. So SPY, of course, is going to look almost the exact same as the SPX because it's just 1/10 of what SPX is. And again, I think you're going to see that we're just chopping sideways here in this range right now. It remains to be seen where we're going to go from here. I don't have a lot of conviction necessarily to the upside. It wouldn't surprise me at all if we came back down, tested these lows, and then we'll see maybe chop around there a little bit and then maybe finally start to move to the upside. If we do in fact come in and break these lows, I think our next area we're looking at is probably down around here. So we need to see how that plays out. If we do in fact start to go a little bit higher, I'm not expecting to go significantly higher, maybe back up to around that 200-day moving average line and possibly chop a little bit sideways there. Now, one of the things that is looking a little bit favorable to our markets is the fact that volatility has fallen off significantly. So volatility is back down around the areas that had been highs previously, so it's fallen back down to that point. That's a pretty good sign when volatility and fear in the market, panic in the market drops off to that level. That at least gives a case for chopping sideways. Maybe not necessarily higher, but at least a little bit of a sideways chop as opposed to additional downside fear. Let's take a look at the Qs. So very similar story in the Qs to the SPY. Again, came down, made that big low here last week, had that pop up on Friday, then just chopped sideways for the week. And again, same thing here with the Qs. We're gonna have to see if that low holds. If it does hold, I would expect a rebound back up maybe to the bottom of this channel and back up to that 200-day moving average. I'm not personally expecting any sort of rip that's going to get us back up into the middle of this channel or even back to all-time highs in the near future. I just don't see any catalyst to make that happen right now. Again, barring any unforeseen political moves, again, politics seems to be largely driving the market here at this point. So if we look at the volatility of the Qs, again, seeing the same thing. Volatility has fallen off quite a bit here. Good sign for chopping sideways or maybe even a little bit of a bullish market. So it came back to what used to be those prior highs. So that's a typical place I might expect that to pull back to. And then take a look at IWM. So IWM is the Russell, and we can see that it has pulled back probably even a little more severely than the other markets. And then it also rallied, shopping a little bit sideways. So the Russell is definitely the weakest of them at this point. And we need to see where it goes. It wouldn't surprise me if it did break down through these lows. If it does, that's going to be a little bit bearish on the other indexes as well. Now, the Russell, of course, is largely small caps. They may move a little bit differently than the big caps do, but many times they can be a lead. So we'll just have to see how that plays out. And if we look at volatility on the Russell, again, same story here. To the plus side, that volatility has pulled back and does seem to be probably starting to stabilize around where it had previously been highs back in this area. So we're going to have to see how that kind of plays out over the course of this week. So again, please do me a favor. If you like this, if you find it helpful, give me a thumbs up and subscribe. And so thank you very much, everyone.